But our next guest says he's bearish now, and investors should short crude through 2024 because supply is outstripping demand. Joining us now is Ed Morse, head of global commodity strategy at Citi Research. Ed, welcome. Good to have you with us.
Good to be back with you.
You just heard Pippa's report there, and one of the things she pointed out, interestingly, is that Iranian exports are up markedly since January. I believe it was 2.1 million barrels from 1 point something. And you say, among other things, that figure on more of this to come, that there will be more supply from what you call the fragile five, including Iran, Iraq, Libya, Nigeria, and Venezuela next year. Surplus of supply and demand that you don't think is going to come back as fast. Have I summarized your argument pretty well?
You got it exactly right. The supply side is probably more important than the demand side at the moment, but we can't underestimate what's happening on supply. Non-OPEC supply is rising this year by more than demand, and we think non-OPEC supply is going to rise by about 1 million barrels a day next year. In a world where our economics team sees 2% GDP growth, or about 1 million barrels a day related to oil demand growth, when we've got not just non-OPEC countries, but we have the fragile five. And Pippa talked about Iran. She could have also talked about the others. We have another 200,000 or 300,000 barrels a day expected coming out of Iran by the end of the year. We have Iraq, which has a pipeline down for geopolitical reasons. The three countries involved in that pipeline, or the two parts of Iraq and the one other country, Turkey, involved in it, have every reason to get the pipeline up because they get more money by doing so. And that's going to add 450,000 barrels a day to current Iraqi exports. And we think debottlenecking the south and the pipeline itself will carry more oil. So add another 500,000 barrels a day to that, assuming that Iraq is not going to be particularly interested in abiding by their OPEC plus cut pledges. Then we have Libya, where we haven't had any disruption in a long time. The biggest country externally that's there has announced that the 4-year force majeure it had in not drilling is over, and they're going to start drilling again. And the government, even though they're divided, wants more oil, and they plan to grow production capacity. Nigeria, which was down to about 1.1, 1.2 million barrels a day in 21 and 2022, all of a sudden had peace in the Delta after the most recent elections, and they're not only above 1.5, they seem to be above 1.7, which would be the highest level that they've had since pre-pandemic.
Wow!
And finally, the last one of these is Venezuela, which saw production crashing from 3.6 million barrels a day down to 500,000, and that was 500,000 was about a year ago, and they're now steadily up to about 850 or more than that. We think they'll hit 1 million by the end of the year. So yeah, the fragile five alone are going to have more oil in the market a year from now than we think demand is going to be.
Ed, so when I was trying to unpack the IEA report, I think from last month, they made it sound like, but maybe I misunderstand, that we're already in a deficit. There was like 103 million barrels of global demand, maybe 101 of supply, and that Saudi's the big part of that, deficit. So, like you said, you kind of sketched out a picture where it sounds like plenty of non-Saudi suppliers are able to put plenty of product on the market. But I'm just trying to figure out, how on the one hand they make it sound like we're in deficit, we're drawing down inventories of all kinds, prices could really whip around and kind of push to the upside. But, why you aren't more concerned?
Well, they don't actually have, quite a deficit that you think they do. You get a deficit only if you add in a production number for OPEC countries, which they don't have as part of what they do. But what we're really seeing the first 6 months of the year was a build in inventory, both inventory on land and inventory in the water. And the efforts to pull back on production that started earlier in the year, including a big chunk of it for the month of May, didn't stop that inventory build from happening. We of course had an inventory draw in the summer. We normally do, and the extra 1 million barrels a day and the added 400,000 or 500,000 barrels a day from Russia is what has caused this deficit. We have peak oil demand in the month of August. We almost every year have it in the month of August, unless the world is recovering from a recession. So we think, peak oil demand in the month of August is not really showing the big pull on inventory that we thought it was going to. And indeed, the amount of supply coming into the market, including from the U.S., which is currently estimated at 12.7 million a day. The EIA has it at 13.1. We have it at 13.2 by the end of the year. So even the U.S. is going to be adding to the supply in the next 4 or 5 months.
All right.